everybody, it's me, Buffy, and welcome back to our weekly Market Insights series brought to you by the Capital Markets Trading Desk right here at SunWest Mortgage Company. So let's just get into it. Markets had a rough week brought by higher than expected inflation data and lingering global trade tensions. Stocks and treasuries tumbled after Wednesday's CPI data showed inflation might be picking up once again. Along with the PPI data, the releases have pushed back expectations for a rate cut from the Federal Reserve until late in the second half of the year. On the international trade front, the European Union pledged to implement countermeasures after President Trump imposed 25% tariffs on steel and aluminum, while also stating that he would also issue retaliatory tariffs on countries that tax U.S. imports. The Bureau of Labor Statistics reported that consumer prices surprisingly rose by 0.5% from December, the fastest pace since September 2023, putting the annual inflation rate at 3%. Those figures were much higher than economists' forecasts of 0.3% and 2.9% increase. Food prices jumped 0.4%, pushed by a 15.2% surge in egg prices, while energy prices rose 1.1% as the gasoline index increased 1.8%. Excluding volatile food and energy prices, core CPI rose 0.4% in January, bringing the yearly pace for core inflation up to 3.3%. The reading also surpassed forecasts of 0.3% and 3.1% respectively. It was the biggest jump in underlying inflation since March 2024, with higher prices for prescription drugs, car insurance, and airfares. Shelter costs rose 0.4% on the month, contributing about 30% of the total increase. U.S. wholesale prices also rose in January by more than forecast on higher food and energy costs. The producer price index climbed by 0.4% during the month compared to the median forecast of 0.3%. Compared to a year ago, the PPI increased 3.5%, exceeding the Federal Reserve's target. Core PPI was up 0.3%, in line with expectations, and the annual core PPI increased by 3.6%, surpassing analysts' estimate of 3.3%. Fed Chair Jerome Powell's statement before Congress didn't bring any major surprises. Powell reiterated that the central bank would take a gradual approach to further monetary policy easing, noting that the economy remains on solid ground. He largely avoided commenting on tariffs and other policies under the new presidential administration, but mentioned it was too early to gauge their economic impact. Speaking to the House Financial Services Committee, Powell highlighted that while the Federal Reserve has made significant progress in addressing inflation, more work remains to be done. Sentiment among small business owners cooled slightly in January as optimism fell from December's six-year high. The National Federation of Independent Business Small Business Optimism Index deteriorated to 102.8 from December's 105.1 score. The reading was below the consensus estimate of 104.7. Nevertheless, this marked the third consecutive month the index remained above the 51-year average of 98. 7 of the 10 index components decreased. Capital spending plans had the steepest fall after suffering their biggest decline since 1995, while the uncertainty index ballooned by 14 points to 100, its third highest reading. MBA mortgage applications rose by 2.3% during the week ending February 7th as mortgage rates inched lower. Applications for refinancing loans jumped by 10% from the previous week and were 33% higher annually. The purchase index declined by a seasonally adjusted 2% week to week, but was 2% higher than the same week last year. Mortgage rates dipped slightly last week, with the average contract interest rate for 30-year fixed-rate mortgage falling to 6.9%. The Labor Department reported that the number of Americans filing new applications for unemployment benefits declined by 7,000 to 213,000 for the week ending February 8th. The 4-week average, which smooths out some of the week-to-week volatility, inched down by 1,000 to 216,000. Claims have trended lower so far this year, consistent with historically low layoffs. Continuing claims, which reflect the size of the unemployed population, dropped by 36,000 to 1.8 million during the week ending February 1st, reversing last week's increase. That's it for the week. As always, stay locked in so you do not miss any of our current market news. Also, if you like this video, please hit that like button, share, and subscribe. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Have a fantastic weekend, everybody. Buffy out.